Okay,
Which bond fund would you use for a three-fund portfolio?
well, I've made my position clear about the fact that I'm disturbed by the composition of the bond index itself, and I think it's just too heavy in governments, considering that we talked about this yesterday with those charts. Too heavy in governments, too heavy in foreign ownerships, too heavy in federal ownerships to represent a bond portfolio of a typical American investor, which would be investors' holdings, insurance companies' holdings, pension fund holdings, and things of that nature. And I think a reasonable bond position would be, and this is highly arbitrary, but not 70%, but maybe 30 or 35%. And that's probably, if you look at all the bond funds out there together, as I mentioned yesterday, that's probably about where the competition is, as well as where the U.S. market is. So I think we should have a much better bond index, and nobody at Vanguard, I think Gus agreed with me when I brought this up 3 years ago, and I stopped bringing it up. You don't want to beat your head against the wall. I've got too many issues to worry about other than that one. But what I suggested instead of that is why not have half of your money, say, as a working hypothesis, half of it in the total bond market portfolio, and half of it in the corporate bond intermediate term portfolio. The corporate bond intermediate term portfolio is the intermediate, but so is the total bond market intermediate. In other words, the long and short pretty much balance themselves out, and they both have that same duration. So you can do that without any change in risk exposure, other than credit, and improve your return by probably a half to 3/4 of a percentage point a year. And in these days of stingy markets, where we should have a much bigger edge, we Vanguard, than we do, because the competition has more corporates and therefore higher yields, and they come out to just about matching our bond market fund with lower costs and lower yields. So I think we're a little out of the mainstream, if not a lot out of the mainstream, and my choice would be the intermediate term corporate. I also tried, and I think Gus did agree with me on this, and have them form an intermediate, a corporate bond index fund. Corporate bond index fund would have a correlation with the intermediate term bond index of about 99. So why don't we just use either? I think corporate bond index fund is easy to explain. That's a big part of our job on the phones and in our literature. And an intermediate term bond index begins with the fact that first our poor rep on the phone has to deal with why would you choose the intermediate term index? It's a whole conversation that has nothing to do, in my opinion, with sound investment practices. So give the simple route. It's always been my position. Make it easy to explain, make the structure simple, and so that's my choice to answer the question in more words than I should have, as usual.
This next one is a question